Now, the Central Bank of Nigeria has lifted the ban on 43 items previously restricted from accessing foreign exchange. This means that importers of the 43 items, which include rice, cement, meat, poultry and others, can now freely purchase Forex from the official window at cheaper rates. The CBN says it will also boost liquidity in the foreign exchange market from intervening from time to time. It also says the intervention will decrease gradually when market liquidity improves. The banking regulator pledges to continue to promote orderliness and professional conduct. It confirmed it set the attainment of a single FX market as one of its goals, and consultations are ongoing with market participants to achieve the goal. The new decision comes amid high levels of volatility experienced in the Forex market, with the Naira falling to an all-time low by trading at 1,045 Naira to the dollar in the parallel market and 776 Naira at the official market. Joining us now to discuss this further is an economist, Dr. Ifediora Amobi. Thank you for joining us here on Newsday, Dr. Amobi.
Thank you for having me. Good afternoon.
Good afternoon. Now, since you're the professional here, the economist, help us make sense of all this. What are what's the upside and the risk regarding this new decision?
It's very, very positive. It's actually overdue. We understood at the time when those items were put on the banned list, and the main reason basically was to protect local industries. Domestic industries have to be protected from foreign, competition, and so placing a ban on those items, or in some cases increasing the tariffs on them, is one way that government can encourage local production. But what we have found out over the past 8 years since this intervention went into place at the time was that given Nigeria's huge population, the demand for goods and services over the years have far outstripped supply. And so as much as we try to encourage local production in some of these items that you mentioned, cement is actually a case in point, whereby the price of cement has more than tripled since then, even with all the promises by the cement manufacturers. Food items, even down to toothpicks and metal drums, etc. The fact is that we haven't been able to produce enough of these items locally to cater for the high demand for them. And so, on banning these items is actually, going to do a number of things. One, the reason why the prices have been quite high over time is that the manufacturers of these items have had to source their foreign exchange from the parallel market, which we all know is higher than the official rate, because they were banned from doing that at the time. Now that the ban has been lifted, it is going to increase the liquidity of the foreign exchange in the country. It's going to, make them now request for foreign exchange at the official rate, being able to compete with foreign imports, and will bring down the prices, as well as now help even boost and appreciate the Naira rate at the foreign exchange market. And that's one of the things that we're looking forward to, because now these local producers are now going to source and bring these things in cheaper than they do today. These items, and note that these items were not banned outright. It's just that they were banned from sourcing FX from the central bank. And so, what is going to happen now is that, they're now going to compete with the foreign items coming in, and the only challenge I foresee is for the central bank to ensure that there is enough dollars available to cater for their needs, because it's going to be a huge demand for FX.
Absolutely, and that's exactly where I want to go next. You know, you have $743 million still being owed to international airlines. They're unable to access their revenue. Where are the dollars supposed to come from? Of course, CBN have said that they will occasionally pump in some supply into the system to alleviate some of the shortages. But when you look at the balance of payments on our books, things are not looking good. Where is this money going to come from, and what impact is that going to have on the economy?
Well, the money will just have to be sourced. The economy itself doesn't have that kind of money, just like you said, from our books. However, there are a number of things that that government has to do. One of the easiest things to do is to borrow it. Is to have multilaterals lend the money to us to help cushion this effect. However, there are other alternatives. We've talked about the airlines. There are the oil companies. There are foreign embassies. There are so many other outfits that bring in foreign currency, most especially US dollars. And so they can sell that to the central bank. Central bank has to be encouraged to actually source from these areas in order to boost its own foreign exchange supply. And that's one area. We should also be able to explore even our bills, our open market operation bills, to foreign concerns. And I know there have been instances where foreign investors have expressed interest in buying some of these instruments, including debt-related instruments. And so these are some ways whereby this can be sourced from. But there has to be also transparency and foreign exchange discipline and responsibility from government. We now operate in an era whereby the foreign currency in the country that's supposed to be used to grow the economy is used for everything from politics to social events, and that has to change. Unless that changes, we're going to have a country awash with foreign currency, but not really adding value to the economy. And so there has to be a tightening on foreign currency usage by the central bank. Central bank, it is the CBN's responsibility to ensure that there is enough foreign currency in the system. Foreign investors also have to be encouraged to come in, and one way of doing that would be to strengthen the economy. We have to invest in infrastructure. These are some of the things that attract foreign investors. They want to know that they're coming into a place where there are good road networks, good rail system, power, water, etc. So all these things have to be put in place by government to attract the foreign investors who bring in, these much needed foreign currency, notes that will help cushion this effect. And so there are a number of things that can be done. And if we focus on some of these ones that I have mentioned, I think we'll be able to at least double, if not triple, the FX flow that we need to ensure that this intervention works smoothly.
Well, we hear you, Dr. Ifediora. It's very insightful that you mentioned that we should see more transparency by the government regarding foreign currency, and also that there needs to be investment in infrastructure. But much earlier, you also mentioned that what has come with this new policy is one way that the government can enhance local production. I'm wondering, what are further immediate measures that could also be just as significant that will also enhance local production?
Well, to enhance local production, one of the things that most especially the Manufacturers Association of Nigeria has complained about is the high lending rates. If they can source cheaper funds, if government can provide funds at cheaper rates to the manufacturers, especially the small and medium enterprises, that would help boost their production, help create more jobs, and increase output. And so at that level, that is one prescription, which is on the interest rate side. And then the other one also goes back to the same infrastructure, whereby getting their goods from their factories to the market, bad roads, bad bridges. We just heard the Federal Minister of Works talk about the number of roads that have been approved, for rehabilitation and reconstruction. Wonderful, excellent. This will also help, boost domestic production in terms of the ability to move goods across the country. And then, with infrastructure comes other things, like rail, etc. But besides that, other softer issues like multiple taxes, which is another area where manufacturers complain about and have complained about over the years, if that can be addressed and if that can be successfully achieved, whereby the multiple taxes that they pay can be lowered or brought into a single tax format, that will also help boost local production in its own way in the long term.
Right now, one of the key incentives, or rather one of the key objectives, of this move is to try and move us to a single FX market. How effective do you think delisting these commodities from the banned list is going to go in ensuring that we move to the end of a parallel market by ensuring that there is one exchange rate for foreign currency across the board?
Well, I think it's actually a good step. I think it's the first step, basically. To achieve that single market, or at least close to a single market objective, a lot has to be done to discourage the second market. And I know that, if in just about every major city in Nigeria today, there is a huge informal foreign exchange market going on, that we call the parallel market. And we have gotten to a point whereby this market pretty much determines, the official market. It's almost like, the tail wagging the dog. And so we have to try and reverse that as quickly as possible. Let the dog start wagging the tail. Let the central bank that controls the official rate take full charge of the foreign exchange environment. That way, the parallel market will now, diminish naturally. This move to now unban these 43 items is a good step in the right direction, and it will help achieve that. Secondly, and as much as this is actually more of an enforcement issue, government has to be bold enough to make this parallel market almost illegal, for lack of a better word. That way you discourage, you actually discourage the market, because what we have seen, and those of us who are also into, labor economics and, productivity, issues, have found out that you have hundreds of thousands of able-bodied Nigerians who could use their time, their energies, and their strengths to be a bit more productive, and they're using it hanging around the streets waiting to just buy and sell foreign exchange, and they've been doing this for decades. And so, like I said, in every city in the country, you have a big pool of these, young, able-bodied gentlemen that could be more productive to the country, that are just there sitting around waiting for people to come to buy and sell foreign exchange and make their own little, arbitrages along the way. their efforts can be put into better use if those numbers can be, minimized to the barest minimum. And so, whether I use the right word, legalize or illegalize, but the objective is to shrink that parallel market space as much as possible to the barest minimum and move most of the foreign exchange transactions from that market to the official market. That's the only way the dog can start wagging the tail in Nigeria.
Dr. Ifediora Amobi, Economist, thank you so much for joining us here on Newsday. It's an honor to have you. We appreciate your insight. Thank you.